perfect trading strategy and instant profits? Yeah, that's not happening. But here's how I backtest my future strategy in 3 steps. Step 1. Start with historical data and a clear plan. We are analyzing, not gambling on a whim. Step 2. Run the backtest and let it process. Perfect time for overthinking all your trading decisions. Final step. Review the results like you actually care about your portfolio. Boom. Insightful data, trading strategy all figured out? Yeah, that's not happening. But here's how I start with a simple plan. Step 1. Define your strategy with a simple moving average crossover. We're talking about the S&P 500 E-mini futures here. Step 2. Set your short-term and long-term moving averages. Perfect time to analyze market trends and data. Final step. Execute your trades when the crossover happens. Boom. Potential profits. Want to dive into historical futures data? Here's your guide. First, check out Quandl and Yahoo Finance via Y-Finance for free data. Need more? Paid APIs like CME and IQ Feed offer detailed insights. You'll get open, high, low close, volume, and ideally open interest. Start with the basics, then explore deeper with premium options. Data-driven decisions are just a few clicks away. Ready to elevate your trading game? Let's get started. To help, which backtest framework should I choose? Backtrader, QuantConnect, or Zipline? Backtrader is the most popular and Python-based. QuantConnect is cloud-based, supporting CCA and Python. Zipline is Python too, but with limited futures support. They all have their strengths. Backtrader's popularity, QuantConnect's cloud power, or Zipline's simplicity. Trading strategy without risking a dime? Let me show you a sample Python backtest using Backtrader. First, we define a simple moving average crossover strategy. Then, we load our data from a CSV file. Finally, we set up the backtest engine and run it. And just like that, you can visualize your strategy's performance. Try it out and see how your strategy holds up. Trading game to the next level? Let's dive into some customization ideas to make it happen. First, add commissions and slippage to simulate realistic trading. Next, include risk management rules like stop loss and trailing stops. Experiment with different time frames, 5-min, hourly, daily. Finally, evaluate performance metrics, Sharpe ratio, max drawdown, and more. These tweaks can transform your strategy from good to great.